Hey guys, welcome to my channel. In this video, I'm comparing investing in the stock market to investing in real estate. Which one is better? Which one should you invest in? And which one do I prefer to get started in investing in general? And some of what I'm going to share could be very different if you have $20,000 in the bank compared to if you have millions of dollars in the bank to invest. And that's what I'm going to break down in this video so that you know where to put your money if you don't have a lot of it to put. And also a lot of this is going to come down to personal preference. Some people may want to deal with real estate and some of the headaches that it comes with, or some people may just want to put money into the stock market so they don't have to do anything but watch their stocks go up to the moon. And so that's one of the things that you need to consider for yourself when I'm going through the pros and the cons of the two different investing strategies that I'm talking about today. And of course, if you've been following the stock market and the real estate market, you're going to see that both have been very crazy over the last year or so. So you also want to know when to get into one versus the other. And before we get into the video, one of the things that I'm going to be talking about is the perfect market compared to the imperfect market. So what is the perfect market? The perfect market is when all buyers and sellers have access to the exact same information and none of the variables in the transaction can change between different buyers or sellers. And there is also usually a lower barrier to entry as well. And just to note, there is no such thing as a 100% perfect market. However, different investing types can be closer to a perfect market than others. And now an imperfect market is when buyers and sellers don't have access to the same information. And there is also usually a higher barrier to entry as well. So keep these two in mind when we're going through the comparisons because this is going to be important as well. So having said all that, let's compare investing in the stock market to investing in real estate. So first, let's start with investing in the stock market. In the stock market, the average rate of return over the last 100 years has been about 10% per year. And another point about the stock market is it is closer to a perfect market than real estate. See, most people can get access to the same information online relatively easy nowadays. And with all these apps like Robinhood, Webull, M1 Finance, all of these apps, it has a much lower barrier to entry than it used to. And compared to real estate, it is much easier to get into. And that doesn't matter if you have $100 to invest or $1 million. It still takes the same effort to invest in stocks. And another way that is closer to a perfect market is that each stock for each company is exactly the same. So when you buy a stock, you're buying the same thing that someone else is buying. So overall, you can see that investing in the stock market is pretty easy overall. That's why it's really close to a perfect market. And as far as making money in the stock market, there are two ways that you're going to make money. The first is the increase in value. Obviously, when you're investing in stocks, this is the main thing that you're looking to make money on because this is where most of the money is made. And the second way only applies if your stock is a dividend paying stock. Many stocks do not pay dividends, so you may not get this on all stocks. However, for stocks that do pay dividends, you'll make additional money every year through that. And so those are the key points of investing in the stock market. But let's go to some of the pros and some of the cons of investing in the stock market. As I mentioned, it is easy to buy and sell stocks, so that is a major pro there. You can also invest with any amount of money, so you don't need to have $100,000 to start investing in the stock market. You can take $50, $100, or you can invest $100 million if you have it. So you can really scale at any amount. And because you can invest with any amount of money, you can also scale up as you have more money to invest. So you can start off with investing $100, you can invest $100 a week, you can invest $1,000 a week as you have it. There is no minimum that you have to invest in the stock market. Such as with real estate, you need a certain amount of money for a down payment and for renovations and things of that nature. But we're going to talk more about real estate investing in the next part of this video, so stay tuned. And the last pro that I have for stock market investing is there is no actual work necessary. You may have to do some research and figure out which companies you want to invest in. However, that is much easier than tearing down a wall and renovating a property. So now that we've talked about the pros, let's talk about the con. And the first risk is you can lose money very quickly. When you invest in stocks, you're investing in each of the companies that you've bought stocks in. So it's really up to the company to make profit and keep the company going. But as you've seen, companies can go under, things can happen, lawsuits can happen, different things of that nature can happen to a company that could cause the stock to drop dramatically. Or as we all experienced A pandemic can come out of nowhere and shut companies down for months or even years. And when that happens, some companies may not recover, and when stocks fall, they can fall fast, and you never know if they're going to recover or not. However, I do believe that as long as you do your proper research when you're buying stocks, buying into companies, and you continue to keep up to date with the company, and you invest in companies that you really believe in, then those risks can be very much limited. But it is something to keep in mind and consider. The next con I have is you cannot leverage money to buy stocks. Sure, you could buy stocks with margin, but that's not responsible, and they could be called at any time for you to pay back a huge amount. So you have to be very careful. Now, if you compare that to a mortgage, a 30-year mortgage or 15-year mortgage, you're not going to have to pay that back sooner than agreed upon in the mortgage terms. So that's what I mean when I say you can't leverage your money to buy stocks. And the next con is you cannot control what the company does. What the company does has a high impact of what happens to the company's stock. If the company decides to do something crazy, it could tank the stock or it could skyrocket the stock to the moon. So when you buy stocks, you're really betting that the company is going to continue to perform well. And here's a big con. If you're new to investing, you're not a seasoned investor, it can be an emotional roller coaster. If you've been paying attention to the stock market for the last couple of months or the last year even, stocks can go up quickly and they can also go down quickly. And a lot of times when people see their stocks going down, especially if it's day after day and of seeing red, then they can be very tempted to hit the sell button and get out entirely. But then you never know what's going to happen, because the next day the stock could go back up to where it was before or even higher. We've seen these up and downs with Tesla and other companies, so it's not unusual for this to happen in the stock market. That's why you need to be in the stock for the long term and not trying to time the market perfectly, because there is no such thing as timing the market perfectly. And it's so easy to buy stocks or sell stocks. So your emotions can play a huge part in the stock market. And the last con is, unless you have a dividend paying stock, most of the profit is going to be when you sell the stock. So you have to move your money around in the stock market. If you want to buy other stocks, you'd have to sell one stock to get the money to buy another stock. And as I'm about to talk about in real estate, there are many ways to make money that allow you to keep your real estate and allow you to buy more real estate or even invest in the stock market with those profits from your investment. And so yeah, those are my top pros and my top cons of investing in the stock market. So now that we've talked about the pros and the cons of investing in the stock market, let's talk about the pros and the cons of investing in real estate. And I'll be talking about why I believe that getting into real estate, if you don't have a ton of money sitting around, is much easier to make money on than investing in the stock market. Not to say that you can't make money in the stock market with little money, but to make a lot of money, I believe you need a lot more money to invest. In real estate, the average rate of return is about 8 to 10%. And just like the stock market, this will vary year to year. Some years it'll be more, some years it'll be less, but the average has been 8 to 10%. And when we just talked about the stock market, we talked about it being near a perfect market. Now, real estate is the exact opposite. It is much more an imperfect market. And this is because every house is a different size, it's a different shape, it has different finishes, it's in a different location, it's in different condition. There are many factors that affect real estate prices. Buying real estate isn't like buying stocks. Stocks are very much the same. Every stock you buy in the same company is going to be the same, compared to every house you buy is going to be different. And with that, there is also a very big gap in information. People do not have access to the same information. Even though with technology, information is becoming more and more available, there are still things that you may not be able to find out about a house online. You may have to go to the city, or you may have to talk to previous owner about what is going on with the property, if there are any problems or anything like that. And if you're just getting started in real estate, most likely you're not going to know people that can get you information about a property. The big real estate guys in town are going to have a much bigger advantage because they have access to a lot more information generally. And real estate also has a higher barrier of entry. This is because generally you need a certain amount of money to put down on a house, a certain amount of money to fix up the house if it needs work, and you also need credit and other income requirements to enable to qualify for a mortgage. Otherwise, you're going to need to pay cash for a property, And getting started in real estate, most people are not going to be able to pay cash. My own personal example, I got started in real estate investing through an FHA 3.5% down payment on a multi-family property. So I didn't need to pay hundreds of thousands of dollars for the property. I only needed about $20,000 or $30,000 down payment. And I'll talk more about this in the pros and the cons coming up. And then finally, there are 3 ways to make money in real estate investing. The first is cash flow. This is the profit that you make every single month on the property. Next is appreciation, the increase in value of the property over time. The third is the major tax advantages you get for owning real estate and holding real estate. There's depreciation, mortgage interest write-offs, and many other tax advantages that come with owning real estate. And of course, if you're just buying the property to flip it, then instead of making cash flow, you're just going to make profit on the sale. And so with that breakdown, let's go into the pros and the cons of investing in real estate. The first pro compared to the stock market is it's harder to impulse sell or buy. With real estate, it takes a lot longer to sell or to buy a property. So this way, you're not buying and selling on impulse just because of whatever happened in that current day. And next, there's lower risk. The real estate market is much more stable than the stock market. If you look at the stock market, you can see that Tesla can go down 20% in one day, up 40% the next day, or anything crazy like that. GameStop is a great example of how the stock market can be very volatile. And the next pro is that you can leverage other people's money, meaning you don't actually need $1 million to invest $1 million in the real estate market. You can leverage your money, get low down payments, as low as $35,000 or $50,000 is all you need in order to get started in investing in real estate if you're buying $1 million property. And this is why it appealed so much to me, because I didn't have $1 million laying around to buy a property. So being able to borrow money from the bank to buy that $1 million property and only needing a few $1,000s down was huge for me. So now that we've gone over the pros of investing in real estate, let's go over some of the cons that may be involved in investing in real estate. The first con is that it's harder to buy and sell. So this means that if you need cash quickly, unless you have an existing line of credit, then you're not gonna be able to pull cash out of the property very quickly. Whereas with stocks, you can buy and sell anytime you want. The next con is that it can require a certain amount of money to get started, as well as having your finances in order where you can qualify for a mortgage. So if you have very bad credit, it'll be very difficult to get a mortgage, if not impossible. Whereas with investing in stocks, it doesn't matter what your credit is, as long as you have the cash, you can invest in a stock. The next con is that it requires a lot of work to get a good deal. If you want to get a good deal on a property, you've got to do a lot of research on each property that you evaluate. You've got to evaluate the numbers on all of the properties, and if you can't buy a property for a certain amount, then you have to just move on to the next property. So it can also be very time consuming to buy in real estate. You definitely want to take your time when you're buying real estate so that you get a really good deal rather than buying a bad deal that's going to haunt you later on. The next con is that you have to maintain the property and maintain the tenants if you buy and hold real estate. Whether you like it or not, even if you have a management company, there's going to be some level of maintenance that you have to attend to, or anything else. So you can't necessarily just buy and forget. You need to buy and maintain. And so with that, those are my pros and my cons of investing in real estate. So if you're someone that's just getting started in investing and you want to know which one should you do, should you invest in the stock market or should you invest in real estate? For me, real estate makes the most sense for getting started in investments. And this is because, like I mentioned, there's a very low cost of entry compared to stocks. If you want to have $1 million of investments, with stocks, you need $1 million to put into the investments. Whereas with real estate, you can do it with $0 in some cases, but generally you'll need $35,000 to $50,000 in cash in order to get a mortgage on a property for $1 million. So this allows you to take advantage of the appreciation on $1 million property compared to $35,000 in the stock market. Most of the money that I've made on real estate has been through appreciation. My investments have more than doubled in the last 5 years alone. And so with appreciation alone, in my personal case, I made very good 6 figures every single year over the last 5 years on average. So that's how controlling a lot of real estate can really make you a lot of money really quickly. And the next reason I would go with real estate is because it allows you to house hack. This is just living in part of the house while you rent out the rest of it. This will usually take care of most of the mortgage If not, in some cases, you can make money while living for free. And if you have to rent a place to live anyways, why not own a place and then have other people pay for it? That's the best way, in my opinion, to get investing. And so yeah, that's why I chose to start investing in real estate before I started in the stock market. Because you need a certain amount of wealth to invest in the stock market to really make it worth your time. And real estate is a very powerful tool that allows you to start building that wealth. For me, coming from nothing, having no money growing up, and working my way up, this has been the most powerful way that I have been able to find that allows me to build wealth very quickly. And so I hope this video has helped you, and if it has, definitely like the video down below, leave a comment, tell me what you think about the video, tell me what your thoughts are on the stock market compared to the real estate as far as investing goes. And if you enjoy this kind of content, definitely consider subscribing down below so you don't miss any of my new content. And so with that, thank you for watching and see you next time.